Hi friends, final accounts contains so many adjustments like outstanding expenses, prepaid expenses, income to be received, income received in advance, depreciation related adjustment, adjustment for bad debts, provision for bad debts, interest on capital adjustment, interest on drawings adjustment. Out of these adjustments, adjustments related to bad debts and a provision for bad debt, these two are important. Regarding bad debts, I made other video, please watch that. Today's topic is provision for bad debts. Provision for bad debt is also known as provision for doubtful debt, reserve for bad debts, or reserve for doubtful debts. Then what is meant by provision for bad debts? With one example I will explain. Assume that there is a firm. In 2017 year, firm contains two sales. One is credit sale, one is cash sale. Firm sold 50,000 worth goods on credit basis and cash sale amount is 1 lakh rupees. Then in case of credit sale, since we should get 50,000 from customers, there is a debtor for 50,000 rupees. Debtor is asset for us. And as per our experience, we are predicting that out of this 50,000, 10% may not come from them. Because when we sell goods to customers, some customers may fail to pay the money to us. That is common. Then 10% of 50,000 becomes 5,000 rupees. So regarding 5,000 rupees, we have some doubt that money may come or not. Can we show this amount as bad debts? No. Why? Because what is meant by bad debts? It is a confirmed loss. When we clearly know that this 5,000 is not going to come, then only we can record that as bad debt. But here we are predicting that 5,000 may not come. Means chances are 50-50. So we cannot write it as bad debt because 5,000 may come. And if we ignore that 5,000 bad debts, then what happens? In P&L account, without considering these expected loss only, we prepare P&L account and we calculate profit. Assume that the profit for 2017 year is 80,000 rupees. But what is the mistake here? This 80,000 is derived without considering that 5,000 expected loss. Means profit is overstated by 5,000 rupees. Our actual profit is 75,000 only. And in balance sheet also, without deducting that 5,000, the gross debtor value 50,000 only we are recording. Means even assets are also overstated here. So if 5,000 is not recorded in the books, then profit is overstated and even asset value is also overstated. Our final accounts are not reflecting the correct financial position and profitability. And if we record that 5,000 as bad debt, it is technically wrong because money may come. Then what is the solution? The correct way of dealing with this 5,000 rupee expected loss is provide a provision regarding this 5,000. That provision is called provision for bad debts. Then what is meant by a provision? From profit, if any amount is kept aside to meet future uncertainties, then that amount is known as provision. Provision is nothing but savings. So what happened here? Our current year profit is 80,000, but instead of showing 80,000 in P&L account, from 80,000, 5,000 I am keeping aside. and I created a provision with this 5000 rupees. That provision is called provision for bad debts. Then, since I have a doubt regarding this 5000, from debtors also I am removing this 5000 rupees, and I am showing debtor with 45,000 only. So regarding provision for bad debts, there are different cases in final accounts. Sometimes provision for bad debt may be given in trial balance only. Sometimes PBD may be given only in the adjustments. Sometimes it will be given in trial balance and in adjustments. In each case, how to show provision for bad debt amount in final accounts. With some examples, I am explaining this point. See this example. Here, provision for bad debt is given in the adjustments. What is the meaning of that? While preparing trial balance, we didn't consider PBD. We didn't deduct PBD from debtors. So debtor amount 10,000 is a gross value. And after preparing trial balance and before preparing balance sheet, we are predicting that 10% of these 10,000 rupee may not come in future. We want to provide a provision of 10% on debtors towards provision for bad debts. From current year profit, we want to keep 10% of 10,000 rupee aside. Then, in profit and loss account, this provision for bad debts will be debited. 10% on 10,000 will be 1,000 rupees. Since we want to keep 1,000 rupees aside, in P&L account, we have to debit it. And in balance sheet, from debtors, this PBD should be deducted. Why? Because it is given in the adjustments. Adjustment amount means it is not yet deducted from debtors. So we are deducting now. Remember, if provision for bad debt is given only in the adjustments, then in P&L account debit side we should write that, and in balance sheet from debtors we have to deduct it. Now see this example. Here provision for bad debt is given in the adjustments and as well as in trial balance. If PBD is given in the trial balance, then what is the meaning of that? In previous year, at the end, we provided this 1,000 rupee as provision for bad debts. So, for current year, this is opening balance. This 1,000 rupee trial balance PBD is called old PBD. What is the meaning of that? Already we provided 1,000 rupees PBD. And current year last date, we want to provide 10% provision for bad debts on debtors. Then we should observe whether trial balance PBD is more or adjustment PBD is more. Trial balance PBD is known as opening PBD and adjustment PBD is called closing PBD or old PBD, new PBD. So trial balance amount is 1,000 rupee, old PBD is 1,000 and a new PBD is on debtors 10% when we calculated 4,000 amount is coming. So adjustment amount is 4,000. Then adjustment amount is more by 3,000 rupees. What is the meaning of that? Current year starting date, we provided 1,000 for provision for bad debts, and current year at the end, we want to provide more 3,000 rupees on debtors towards provision for bad debts. Now, how much is the net loss? Total PBD should be 4,000. In that already last year we provided 1,000 rupees. Now more 3,000 rupees we should provide. This 3,000 rupee in current year profit we should deduct this 3000 rupees. So in P&L account debit side, 3000 should be debited. And in balance sheet from debtors, adjustment amount, that is 4000 rupees is to be deducted. So remember, when provision for bad debt is given in the trial balance and in adjustments, then we should see these two values. If adjustment amount is more, then the difference should be debited to profit and loss account. And in balance sheet, new PBD, that is adjustment PBD, we should deduct from debtors. See this example. Here also, provision for bad debt is given in the trial balance and in adjustments. Trial balance amount is 4000 and adjustment PBD is 800 rupees. Means what? Last year we provided 4000 rupees for provision for bad debts out of last year profits. But current year ending date, we are thinking that the provision should be 800 rupees. So last year we provided 3200 extra. Now that extra PBD in current year we have to cancel. Then how to show this in final accounts? In profit and loss account, 3200 should be credited. Why? Because last year we provided 3200 extra. From last year profit, 3200 we deducted. But in current year we are feeling that this amount we need not to keep aside because actual doubt is only 800 rupees. So we want to add it back to profit. That is why 3200 should be credited to P&L account. And in balance sheet from debtors, only adjustment amount, that is 800 rupee, is to be deducted. Remember, when provision for bad debt is given in the trial balance and in adjustments, and when trial balance amount is more, then the difference should be credited to P&L account. And in balance sheet, adjustment provision for bad debt is to be deducted from debtors. Then, see this example. Here, provision for bad debt is given only in the trial balance. What is the meaning of that? Last year, we felt that 4000 may not come from the debtors. So, from last year profit, we reduced 4000 rupees. We kept 4000 rupees aside for to meet this bad debt loss. So, current year opening PBD is 4000 rupees. And in adjustments, provision for bad debt amount is not given. Means what? There is no extra PBD in current year, and we want to continue the same PBD 4000 rupees even at the end of the year also. In this case, in profit and loss account, need not to debit anything. Why? Because in last year P&L account already this 4000 was debited. And in balance sheet, since 4000 related bad debts are 4000 related debtor is doubtful, from debtor value 40,000 we have to remove that 4000 rupees. So remember, when PBD is given only in the trial balance, don't write anything in P&L account, and in balance sheet from debtors you have to deduct that PBD. Now come to another topic, that is sometimes bad debts and provision for bad debts both will be given in the question. To understand these points clearly, first you have to watch my bad debt related video. See this example. Bad debts are given in the trial balance, and in adjustments, provision for bad debt 10% is given. Then, trial balance bad debt is already deducted from debtors, and adjustment bad debt reserve is not yet deducted from debtors. First, in profit and loss account, bad debt should be debited because bad debt is a loss. As per nominal account, it should be debited to P&L account. And provision for bad debt. From current year profit, we want to keep 4,000 rupees aside towards bad debt loss. Therefore, to deduct 4,000 from current year profit, 4,000 PBD should be debited to P&L account. Then in balance sheet, don't deduct trial balance bad debts 1500 because it is already deducted from debtors. Why? It is given in the trial balance, no? Now, adjustment PBD 4,000 rupees we should deduct from debtors because it is given in the adjustments, means not yet deducted from debtors. Now we should deduct it. See this example. Here, bad debts are given in the trial balance and in adjustments. And in adjustments, provision for bad debt is also given. So, two bad debts are there, one provision for bad debt is given. Trial balance bad debt 1000 is already deducted from debtors. After deducting that 1000, the net debtor value is 40,000 rupees. And adjustment amounts, bad debt amount 500 and a provision for bad debt 2%, these two are not yet deducted from debtors. In profit and loss account, debit side, show both bad debts. Trial balance bad debt 1000, further bad debt 500. These two are losses. So total loss towards bad debt is 1500 rupee. It should be debited to profit and loss account. And while calculating provision for bad debts, amount is not given, 2% is given. Directly don't calculate that percentage on 40,000. Why? Because 40,000 is not good debtor. In this, bad debt loss 500 not yet deducted. First we should adjust that. First we should deduct that. Then the good debtor, net debtor value is 39,500 only. Provide PBD on 39,500. So 2% on 39,500 is 790 rupees. Debit that amount to profit and loss account. And in balance sheet debtor asset side, take debtor value, adjustment bad debts, adjustment provision for bad debt. These two only we should deduct. You know the reason. Trial balance bad debt, it is already deducted from debtors. So again we should not deduct that. Adjustment bad debts and PBD, these two are not yet deducted from debtors. Therefore now we should deduct them. Then see example 7. Here bad debts are given in trial balance and in adjustments. Similarly, provision for bad debt is also given in the trial balance and in adjustments. Then, in profit and loss account, both bad debts are to be debited because both are losses. And while calculating provision for bad debts, from debtors 40,000, first you have to deduct adjustment bad debts because adjustment bad debt is not yet deducted from debtors. After deducting the 2,000, the good debtor value is 38,000 rupees. 10% on 38,000 is 3,800. Now adjustment PBD is 3,800 and trial balance PBD is 1,000 rupees. Means total provision for bad debt is 3,800. In that, already in last year we provided 1,000 rupees provision. Now in current year, more how much provision we should provide? 2,800. So from current year profit we should deduct only 2,800. So debit that amount. Then in balance sheet, don't deduct trial balance PBD, trial balance bad debts, because these two amounts are already deducted from debtors. Now deduct only adjustment amounts. First bad debts you have to remove from 40,000. Then from 38,000 deduct adjustment PBD, that is 3,800 rupees. Then the net debtor value 34,200 should be shown in the amount column. I think this concept is now clear to you. Thank you.